Hello, good morning, good afternoon, good evening, welcome. My name is Terry Dawson. I actually just said that I would start the webinar in a few moments, and in classic style I had mute on my microphone, so I'm the first one to do that on this webinar. So welcome everybody. I'm delighted to be able to welcome you. My name is Terry Dawson. As I said, I'm responsible for products and technology with an organization called Encompass. We are a KYC automation platform based in London, Sydney, and here where I am today in sunny Amsterdam. A little bit of housekeeping first on this webinar, and then I'll introduce you to the panelists and we'll get going. So microphones and cameras are all muted for participants. If you do have questions, please feel free to put them in the chat. I'll keep an eye on them as we go, and if there are questions that we can answer, we'll come to them. We'll be launching 2 poll questions during the course of the webinar, and you'll see those come up on your screen, and we'll talk about the results of those polls as we go. And the webinar is being recorded. We're scheduled to last about 60 minutes, and I'll try and keep us to that time. We have some interesting topics, and it's a very exciting subject for all of us, as I'm sure we all know. Okay, so let me introduce the people that I'm joined by today. So we have Raja Ramani. Raji is with the RBC Capital Markets team based over in North America. Marijn Olsruin. Marijn is with ING based here in Amsterdam. And then Supriyo Gur is with Capgemini. And actually, I'll hand over to Raja, Marijn, and Supriyo to do their own introductions. If you could briefly. So Raja, starting with you.
I'm Raja Ramani. I run client reference data and client lifecycle management here at RBC Capital Markets. Excited to speak about this topic. Yeah.
Thank you, Raja.
Hi, everyone. Good day, everyone. I'm Marijn Olstorn, indeed with ING Bank in Amsterdam. And with ING, I'm at the Wholesale Bank Financial Crime Prevention Department, looking after the implementation of several AI solutions that we're currently having in either production, development, or exploration phase. So that's hugely exciting, and happy to discuss that today.
Hi everyone, Supriyo Guha. I lead the financial crime compliance practice for Capgemini globally. In my role, I define transformation solutions for clients like Raja and Marijn. So very happy to be joining them to talk about this topic on AI.
Excellent, thank you all, and really delighted that you could join us today to talk about these topics. So it's true to say AI, it's no longer really an experiment in financial services. It's live in many environments, in production in a variety of different ways. It is expected. I think there was a period of time, certainly when expectations of what AI could deliver from a very senior executive level were quite broad, and the expectation was that we could solve a hell of a lot of problems with this technology. I think that's still true, but I think a year or so ago, the practical realities of being able to deliver production grade solutions through AI was quite low. I do think that where we sit today, one, I think the expectations have become a little bit more realistic, but also the capabilities have shifted significantly. We see it in our organization. I know you see it in your organization. So what we're going to look at today, or talk about today from a topic point of view, is what it takes to operationalize AI at scale. What are the things that we need to do within our organizations, within our teams, within our executive suites, in order to make sure that we can operationalize it? And then where are we seeing ROI? What are the things that are actually making a difference as we deploy AI-based solutions into our organizations? And where are we making choices between build and buy, and how are we adapting in that way? And then particularly of interest for us in the anti-money laundering space is, where is AI making a difference in specific areas like know your customer? So that's the scope. We'll dive in. We've already introduced ourselves, but I'm gonna lead with, if we think about where AI is delivering within financial crime prevention today, give us a flavour of what you're seeing. And if you don't mind, I'll start with you, Marijn, and get your perspective on where it's delivering today.
Yes, thanks, Terry. And I think I'll break it down by the different types of AI that are being used. And about 2-3 years ago, everyone was focused on generative AI and how to use the LLMs. And then I think what's happening now is that a lot of banks are having use cases with generative AI in production today. Use cases around working with unstructured data. Of course, the large language models can actually produce content, so that's very useful. We have challenges there to control the hallucination. I would say that is doable. So these are like use cases, I think, around extraction from documents, maybe drafting risk memos, and also supporting analysts in their tasks. So I think these are typical use cases appearing in production today. Then, of course, the big trend or hype, if you want, is agentic AI, and I think this is tremendous promising. Where it can execute a combination of tasks, and basically you can virtualize workflows with agentic, and this is huge future potential. A lot of cases in production today already, likely not. It's really early stages development. And if you talk about scale and return on investments, you probably find it more in the more classic type of AI, meaning the machine learning models, which can handle large amounts of data, can actually support with decision making, and are typically for use cases like transaction monitoring, risk rating. So that's more technology longer in existence, but probably the one that's delivering most value day in, day out today.
I think that's really helpful, especially when you break it down or group it, classify them in terms of machine learning, generative AI, and agentic, and there are clearly different use cases and benefits for how the types of problems that each of those deployment types can solve. From your perspective, Raja, from a sort of operational use case point of view, are you seeing similar areas, similar topics that you're addressing as Marijn's just highlighted?
Absolutely. In terms of operationalization, there are a few key aspects that we look at. If you think about handling time of a KYC onboarding case, and you look at what it takes in terms of time to onboard, depending on if we are onboarding a low risk or a standard risk, medium risk, or a high risk client, there are a few areas that you can see where your average handling time is quite high. The largest use case there, at least in what we are seeing, is around intelligent document processing. And that is one of the key areas where we are starting to see not just us, but more and more people leverage AI in having our ops teams not have to review documents manually and have the AI agents do that for them and then become the reviewer rather than the extractor of information. So that's one area where we are seeing key improvements. The other area I would say is potentially creating dynamic outreach in how we want to connect with our corporate clients and have them respond. Client experience is a big part of improving how we do client onboarding, and that's another area that I would point out. So those are kind of two key areas. There are other areas as well, but those are still in the early phases, like refresh and continuous monitoring.
Yeah, I think that's a really clear distinction. As Marijn, I think you echoed what Marijn said about human in the loop when it comes to looking at document extraction and the efficacy of getting structured data out of unstructured. But it is interesting, the ones where we're still experimenting. I might come back to that in a second, actually, because it's obviously an interesting topic for us. Supriyo, any further thoughts?
Yeah, no, I would like to echo some of the conversations that I heard from Marine and Raja. Look, obviously here in the KYC domain, to focus on that, there is a huge focus on an efficiency play. But I think to Raja's point, I think it is also becoming more of a customer experience play as to how do we provide more seamless experience to clients? How do we create multiple channels so that the clients could provide certain documentation, could help with accelerating their whole customer onboarding journey, or for that matter, for refresh, right? How do we, what we are seeing in a few places, just to add on to the use cases Raja mentioned at the end, I think we are also beyond just customer outreach and intelligent data processing, we are also seeing a lot of involvement of AI in the areas of screening and identifying hidden risks. What I mean by that is looking at data, mining the data, and figuring out entity relationships and identifying if there are any key hidden risks, which in the midst of all the data noise, you would have traditionally not looked at or not be mindful of. So as the role of human analysts are shifting from, as Raja said, extractor of information to more of reviewer of information, I think AI is helping tremendously there in various client use cases to unearth those hidden relationships and provide a good perspective on risk. The other big area that we also see is a paradigm shift in the whole KYC refresh domain, where with the speed and the scale that AI can provide, clients are effectively able to move away from periodic time-based KYC to more of a perpetual continuous KYC, where you are able to look at data from the perspective of material changes, client data from a perspective of material changes, and then you're able to accordingly launch KYC refresh on demand rather than waiting for the 3-5 year cycles to happen. So I think those are scale use cases that are coming into the picture more often now with use of AI in this space.
Yeah. I think that's very good. I think certainly what we've seen in the conversations that we have on a regular basis is the something of a shift. It does depend on which financial institution, but something of a shift from AI can help with reducing the cost of the burden of KYC to that shift that you've all mentioned, which is actually this is much more about how do I onboard a client with the least friction? How do I make it a painless review and refresh process for everybody involved, especially when it comes to complex client onboarding, funds, or if you're doing a complex loan or part of a complex loan. So I think that is very interesting. What are you all seeing in terms of the practical impact of the things that you actually put into production? So if we look at document extraction, for example, what is that meaning for you in terms of actual return, reduction in time, reduction in cost, increase in customer value? What are you actually seeing?
So in our case, for that specific task where we measure our average handling times are reducing by 30 to 40%. In those cases, right? Again, I want to be very specific about that specific task because intelligent document processing improves the average handling time of that task.
Yeah.
And then the cumulative impact of how many documents you collect through that process, it does provide us efficiency from a perspective that we can now process more cases with the same team that we have. So that's the way we think about it. We're definitely, I think the cost is going to increase before it's going to decrease. And I think that's something that we've all got to go into this with.
Yeah. And I would like to build on that, what Raja said. A couple of things, Terry. I think increasingly we are seeing, to your point, clients are moving away from just the cost play to more of a efficiency effectiveness play. And there, particularly one of the key aspects of obviously KYC process has been screening. In screening process around adverse media, around name screening, we have seen a tremendous uplift of time saving, cost saving, as well as effectiveness through the use of AI. For example, we are seeing now use cases where we are able to do 70% plus automation purely from false positive determination. So your alerts generated now, AI agents are looking at the alerts at the first case and only doing human referrals where it makes sense. And that's 70% plus, which ultimately results in, let's say, 50 to 60% cost savings for our clients from a net cost of between the technology cost as well as the cost of human resources there. The other big area where we are also seeing time save is the whole aspect of collecting data from multiple sources and just documenting that as part of the overall KYC process itself, right? Where it is about how can I go to more and more unstructured data sources, curate that information, provide credible evidence around that information, make sure all of that ticks and ties, and I have the audit trail for that data. And previously, all of those activities, just the momentum of doing those activities used to take several days. I think those are getting crunched down to a few minutes. And that has been a tremendous save because now suddenly all that brain power, which is getting used in terms of, hey, I need to take the information here, do a screenshot, put the information in this particular field within my KYC workflow is gone. And I can now actually focus on looking at, is this person a sanctions risk? Is this person having an adverse media and a potential fraud risk? Should I at all onboard this person? So those are the kind of questions that KYC analysts are able to focus on suddenly.
Yeah, very good.
Yeah,
right?
Yeah, certainly. Yeah, I can confirm that, and I understand that they're interested in the percentage time saving potential, and I recognize those numbers, but also to Supriyo's point, it's the type of activities that you automate. So, for example, on the data extraction use cases, the tasks that you automate are the simple, repetitive, the kind of clerical tasks, if you want. You take these out of the day of the practitioner. We receive feedback from end users saying, "You're automating the most boring part of my work." And that's very positive to hear. And the consequence is that actually the human specialist can have more focus on where the potential risks are. Which means that the value potential is in effectiveness and actually in having a better control over your financial economic crime risks. So that's those two dimensions of value can go hand in hand. I think that's good to emphasize.
Yeah, excellent, good. So that's really helpful and very clear. When you've thought about, and clearly you've all thought about which areas do we deploy AI, and in what situations is it going to help, and those repetitive, relatively, I don't want to say mundane, but the inputs, let's say, as opposed to the decision making or anything else. All of these things are sort of in the context of change management to some extent. So AI is truly transformative in terms of the capabilities that it brings to us and the opportunities. Deploying it, though, at scale within a highly regulated environment, I imagine, has some challenges. And before we discuss it, actually, I wouldn't mind just polling the audience to see what their experience is in terms of trying to take AI initiatives from, the kind of pilot phase into production as you've been able to do. So can we just pull up the poll? And let's have a quick test of the audience before we discuss it in more detail. So when you've looked at scaling AI from pilot to production as people joining this webinar, what types of issues have you seen, and what's been the biggest barrier to rolling out. If you could all just take a moment to think about that and answer the poll question, that would be good. We have a few responses coming in. I've also got it on my screen, so I'm going to give my answer as well. So I don't know if you guys have as well. I think we have to answer it in order to be able to clear the thing off the screen. Okay, interesting. So data quality and fragmentation, which has certainly been an area of focus for many of us, has been a barrier, and that seems to be coming up. There are a few there which are all of interest, but that's interesting. So Raja, when you think about that response from the people joining us here, data quality and fragmentation being possibly one of the biggest barriers to rolling out in production, how does that echo for you?
I think that makes total sense. That probably is a very key factor in broader scale, like rolling this out at scale. There are a lot of pilots that are happening, pilots, POCs, POVs, whatever our favorite word is, right? But to actually scale this and then tie it back to all the fragmented systems that we have within the space, I think that's a key area to look into. There's a lot of talk that happens about technology vulnerability and how AI is increasing that. You have to think about data fragmentation in the same way. Is the moment you start using AI within the space, you're going to very quickly identify all of the data gaps you have and the remediation exercise that you have to run through to fix those data gaps before you can effectively leverage AI. The other barrier, and it's not necessarily on this list here, is a lot of times we look at, and I'm going to tie this answer back to the different ways of leveraging AI, machine learning versus Gen AI versus other things. Agentic is something that everybody's speaking about, but what that means is how do we redefine what we are doing and how do we think about the actual workflows? So I think there may be more than these 4 barriers that's here on the screen, right? Some of that has to do with thinking out of the box and thinking how you would redefine your workflows using AI. So fragmented data, yes, absolutely, that's the foundation. Getting that right would mean you could implement some things quicker than other things. And then there is the whole redefining how AI plays a bigger role in decision making, which is where you have to rethink workflows. So I'll pause there.
Yeah, Supriyo, do you want to come in on that? You see a lot across your client base as well.
Yeah, so look, data struggles are continuous, right? So your original question was around how do we scale AI and how some of these POCs and POVs goes into pilot. I think it is very, very important to be able to choose the right use case. We talked about certain use cases, talk about which are the use cases which matters to you the most. And I think as we are engaging with clients, we're seeing increasingly they're engaging their analyst population to help them make that determination, look at their day of an analyst and look at what is the most consuming and what is to Marine's point, what is the most boring part of that job, which could do with that outlive, which is not really adding value, which is busy tasks, and be able to identify that through the data, studying the day of an analyst and the data around that, and being able to automate that. And today, with the wide range of AI tools that we have, I think there is enough wherewithal to kind of be able to automate most of the tasks or many of the tasks. So being able to choose the right use cases, defining the success factor as to what good looks like for you. We all have to come into terms with the fact that AI is not a magic pill that suddenly solves everything and does everything perfectly. So there is going to be imperfection. How do I get my analyst population ready to deal with those imperfections and identify those imperfections becomes critical from scaling perspective. And then how do I move then from doing this on an ad hoc basis to Raja's point, a more agentic systematic basis. And for that, you have to rethink your target operating model and also think about how do I retrain my analyst population. So those are emerging as critical things that needs to be considered when you're actually thinking about scaling AI. You cannot have the same workforce with the same ideas doing it. One of the use cases that we do find is you launch an AI project pilot, the AI produces certain results, and analysts feel the need that, hey, I need to check each and everything, which means I'm reperforming everything, which is a tremendous loss of that whole production benefits that you're thinking about.
Do you agree, Brian?
Yeah, happy to reflect on the poll as well. I recognize these barriers when operationalizing for sure. I was interested to see that the data topic has gotten largely the most votes. Maybe this is due to the specific audience from Encompass employees in the call. But for sure, it's a key point, and I think when starting digitalization on the KYC journeys, starting with the deterministic technologies, rule-based systems, model-based systems, of course, very let's say hungry for data. So then the data is a big enabler, and it still is today. I do also see that with the newer waves of AI technology, they can also play a vital role to help plug the gap in terms of data, because those tools can support with data retrieval, data extraction, data orchestration, turning unstructured data into structured data, things like that. So actually AI can play a role on both sides of the equation to fix the data foundation.
I think the way that we structured some of the conversation, we put sort of a data preparation a little bit later in the kind of agenda conversation. But since it's come up, I think we should talk about it now. I think having high quality data that is well structured and having governance around that, I think it is of course foundational. And I think choices between what is a deterministic output compared to what can we apply either Gen AI or agentic to. Not that those things are mutually exclusive. You can have, deterministic outputs from agents, of course. In our use cases here around KYC, you want the way that you approach a profile, the creation of a profile, to be consistent. And even though the ownership or the filings may have changed, you want a consistent approach to how you go and gather that information. So while we can use agents to do it, it's a rule-based thing, and I certainly, when we think about data-driven training within all of the things that we're doing, I do see that as critical, and it always has been. Interestingly, I was in a similar webinar maybe 2.5 years ago, still in the compliance arena, but much more on the market abuse, regulatory, conflicts of interest side. The largest barrier to sort of acceptance or adoption of AI at that time, coming from a range of compliance professionals, was actually much more just about trust. It was all about how do we get buy-in, not from a budget perspective, but just from a do we trust the outcomes. I think that has shifted significantly. I think practitioners like you who are in the field deploying these things have learned and continue to learn as organizations how to make sure the data is structured well in order to get outcomes, how to put human in the loop, how to put the right other guardrails around it. So when it comes to sort of data strategy and how you think about it, I know we had this later in the original topic, but because it's come up, Raja, could you give us some of your perspective on how you're managing the sort of the all of the aspects of good quality, well structured data and the governance around it?
Well, I guess I'll start with we are not. Look, I'd address this in maybe two angles, right? One is this whole thing around data strategy. Data strategy has been a thing for various has been a focus for various reasons, right? 5 years ago or 6 years ago, if you would have raised this topic, we'd be focusing on data strategy based on regulatory reporting and financial reporting, uh, and 10 years ago, when we started creating CDO roles within the industry, that was the biggest focus: is data management, data strategy, data management, data governance. It continues to stay a focus. AI is implementation of different types of uh, AI usage is only going to create or expose all of the additional gaps you have within your data, and that is then going to need a rethink of how do we even think about data strategy. When I start thinking about leveraging AI, we now are looking at RAG-based architectures. We're looking at vectorizing data that we are extracting from documents. What is our data strategy to address that? So each of these components has a slightly different view in how you address them. Um, and the second angle that I did want to address this, and Terry, you mentioned it, is trust, right? When I answered that poll question, I actually picked regulatory and auditability concerns. I did not pick data quality and fragmentation. That is foundational. I think we all deal with that. I don't think data quality concerns, unless there is a miracle, is going to go away tomorrow, right? But when it comes to regulatory and auditability, that in this space of KYC, client onboarding, in my mind plays a bigger role to adoption. I could build the best implementation if I cannot show trust or auditability, and if the regulators don't accept that, I think that's going to be a bigger barrier to entry here. So I kind of wanted to take those two angles at it. We'll constantly be thinking about data strategy and how it evolves, and then auditability and regulatory acceptance of the results that we produce.
Very, very good. Marijn, anything to add on?
I would really want to echo what Raja is saying, so I can keep that short. Data is the foundation, and it will remain like that. Also, looking where do we want to go? I think many of us in the industry are looking at continuous or perpetual way of doing KYC, which enables us to actually focus more on the risks. Well, we use a lot of different tools to get there. It's deterministic AI. These are all just tools in the box, but the data remains the foundation. Yeah.
Yeah. Good. Supriyo, anything? We'll go on to the workflow side, but anything to add there?
Yeah, so I think, look, a couple of things. I think having trust on the data and being able to have the data at the right place with the right quality is critical. I agree with Raja that the data problem is not going away anytime soon. But one thing I see from an industry perspective quite often nowadays is clients actually using AI to now improve the data quality. So, for example, creation of a golden customer record. This has been, I think, in the industry a problem statement for a decade. Everybody has been trying to create that in different times in that decade. They've tried creating data management layers, which creates that client profile. With AI and its ability to unleash and harness the data across multiple databases, duplicates at once, it is far more easier for you to now create and effectively do entity resolution and create that golden record and show you the duplicates, show you the gaps within the data, and help you effectively plug that. I think that becomes a critical aspect. Again, from a trust perspective and the regulatory aspect, completely echo what Raja said. They're having AI unearth some of the hidden relationships of the client data within your bank and being able to show actually where the risks, the KYC risks resides within that. Do you actually have a sanctions party 2, 3 nodes down the line who can influence the money flow within that particular transaction set of that client? Being able to showcase that to the regulators, again, gives a huge set of confidence on the KYC program that you're running, and regulators truly feel that you have the understanding of where your data sits, where your key risk sits. So I think that is becoming more and more critical, having proper data lineage and being able to trace data all the way back to its source, and being able to prove how frequently you have refreshed and reviewed that. Where is the source of the data, and is it a trusted source? Is it as per your policy? Becomes again very critical. The last piece I will say, and stop on that, is probably the whole data privacy piece also becomes critical now, as to how well you are able to protect the data, make the data available for the client, but only for only for authorized use. This has been for certain time, it has been a European problem to deal with because of the regulations out there, but increasingly it is becoming more of a global problem statement. Everybody do care about the privacy of the data in the current data and scenario, and that's becoming increasingly a topic of discussion.
Yeah, I think that's clear. Data visibility, the tension between data privacy regulations and legislation and anti-money laundering regulations and legislation, that's a whole topic in itself as well. But I do think that AI clearly can help in bridging that or making it, helping us to determine the data visibility rules and data privacy and addressing data privacy concerns. What other areas, from an overall compliance point of view, Supriyo, what other areas do you think AI is set to really transform compliance or really make a difference in the operational aspects of compliance?
Yeah, I mean, I wouldn't talk about compliance in general. I would probably even sharpen the focus on financial crime compliance, your typical KYC, AML, screening, fraud, dispute, chargeback areas. I think beyond just the KYC, and we spoke of KYC at length, I think screening becomes a pretty low-hanging fruit, where we are seeing a lot of use of AI and increasing confidence in customers, being able to translate how the human analysts think about alert disposition, both from a name screening as well as a payment screening perspective, and being able to get that intelligence into an AI and kind of wiping out some of the level 1 alert remediation, which is usually done in minutes. Tremendous benefits in terms of customer experience from a payments perspective. We definitely see a lot of that. And think of it, adding to that, if the AI has a rich KYC profile to depend on, it just makes the life so much more easier for the AI agent to disposition a very large chunk of those screening alerts. So we definitely see that. In the AML world, we see more of a human-assisted AI, which means that AI does all the data gathering, all the investigation data points comes together. AI makes that initial determination of, hey, this does look suspicious and probably needs a suspicious activity report, creates an initial draft, and then it goes to a human analyst. And it is always that human in the loop sort of an architecture, where the human analyst goes through the investigation process, doesn't need to do the essential data gathering aspects of it, but is reviewing it, is determining the riskiness of that particular or the suspicious nature of that particular set of transactions, and finalizing the SAR draft. We do see a tremendous benefit from a fraud and dispute chargeback perspective as well. And customer experience plays a huge role there. How AI is able to help a customer in distress when they're calling a customer service to try and determine that they have been defrauded, money has gone out of their cards or their accounts, and they're trying to claw back. They're trying to understand what are the steps I could take to resolve the situation. I think the power of data AI can bring to those kind of operations, from the profile, from an external data sources, from the modus operandi, and being able to classify that properly and help both the bank as well as the customer get to the right point of resolution fast. We are seeing a tremendous use of AI in that particular space.
Yeah, that's interesting. So obviously we tend to talk a lot about financial crime prevention, and particularly on the anti-money laundering side, but those use cases where it's remediation, it's resolving a situation that's already arisen, I think is quite interesting. From back on the sort of specific to KYC, in the prevention side and the anti-money laundering side, or KYC in particular. Marijn, in terms of complex cases, how effective are you, or were you experimenting and deploying AI to help with complex cases?
Yeah, so as I mentioned earlier, I think one valid strategy is to deploy AI to focus on the simple tasks, so that the humans can focus on the complex cases. I think that's pretty straightforward strategy. And then I think the other side of the coin is where also Supriyo already gave a couple of examples where there's a lot of data to handle. For example, the transaction monitoring, things like that. That's type of activities that models can handle well, and that we can also approve really well. That they function with strong explainability and a really good statistical basis, easier than with generative AI. So I think those are really attractive use cases for the kind of the machine learning type of models, which again then rely on the data foundation to be in place.
Yeah. Raja?
Look, I'd second what's been spoken about to this point, right? One is within this space. I think like our focus is around the low/standard and medium risk area of our client population when we look at client onboarding and applying AI within that space in an outcome to drive the outcome of almost straight through processing. In doing so, one of the things I think we've touched on it in slightly different words, but I would say we really need to rethink what the controls framework looks like as well.
Yeah.
And that controls framework matters. An example of that could be you could either have a human in the loop at the end of every function that you are automating through AI, or you could have a human in the loop at the end where everything just works through and you go, well, there was one of the functions that failed. Let me go rechange the factors and let the whole thing run through. And then what does this mean in terms of total time that it takes and how efficient/effective is it to actually work through that? And the one other call out I would make is almost all of the use cases we are speaking about within the space are machine learning based AI, right? There are some areas where you can think about generative AI. Agentic goes back to that workflow question that I think you're going to get to eventually, right? And there is a maturity phase through this. Machine learning works really well within the space for the use cases that both Supriyo and Marijn mentioned, right? And that's the way I think about it. And there is a shift in the way how people are thinking about which use cases to apply this to.
Yeah. Oh, good. And actually, that does lead nicely into the workflow question. I think that there is a paradigm shift in the way that, and we see this with all organizations that we're talking to, with the way that structure, the governance of how you're deploying AI, the decisions you make about which cases and what type of AI can be deployed. Some organizations are making the AI platforms that they've created with all of the guardrails available to wide populations of employees in order for them to create their own agents and then sort of test them and see if they have the possibility to go into production. But with that, you have to have everything in place to be able to orchestrate how the AI components fit together and where they're deployed and how they're managed and governed. And so there's a complete shift it's similar to financial risk modeling and non-financial risk modeling and how you keep track of all of those models. You know, if you think about how we're keeping track of all of the AI agents and LLM deployments that we have, it's a significant shift in the tools that people have available to them, where they can deploy them, and how we check the output. In terms of the work, I know we've kind of touched on it already, but the workflow areas that you are focused on, I know we've talked about examples of document extraction, we've talked about examples of SAR detection. Supriyo, it's interesting, detection rather than just SAR preparation, report preparation. But what are the key workflow changes that you see today changing? What are the shifts that you're seeing?
Yeah, sure. So look, from a agentic standpoint, that has been the buzzword now, right? I mean, to Raja's point, there's still a lot of machine learning, a lot of unstructured learning at the back end, but at the forefront, it has all been agentic AI and how do I scale agentic AI use cases. Terry, to your point, I think we see a lot of cases where, yes, clients have those platforms which allows you to build your own AI assistants to do certain work that you do personally in your domain as a KYC analyst or an AML analyst, to do certain ad hoc research, which understands your prompts very well and your way of thinking. So we are seeing an advent of that, and in many cases, they're very effective for investigators who are doing complex investigations, including EDD investigations, where they have certain way of approaching it. But the problem that sort of ad hoc AI assistant creation happens is that they don't scale to an enterprise level. The way to scale it to an enterprise level is to go the agentic way, where you have a structured set of prompts which are allowing you to do certain specific tasks, and you engineer the prompts in a way where it delivers results in a consistent manner, right? In that space, particularly from an workflow automation perspective, what we are seeing is clients are taking specific tasks in a KYC lifecycle. For example, aggregation of data from multiple data sources, automate client outreach, getting extraction of information out of documents, creating a dynamic checklist of what are the KYC requirements right at the get-go, drafting a risk rational, consolidating information from all of these sources, transaction analysis. These are just specific use cases. And think of a army of agents, specific agents for each one of these tasks, which is then coordinated by a coordinator agent sitting on top, which is the basic task of the coordinator agent is to trigger each one of these agents to perform those tasks. And each one of those agents are performing those tasks and either using the workflow basically as a orchestration tool, where you're just putting the data in and that is getting orchestrated, but they are individually managing those individual tasks in a very efficient manner, and as and when those tasks become applicable and available. So that is the way we are seeing more of the agentic flow kind of coming into the picture. And more often than not, they are involving human in the loop only in case of exceptions on these individual tasks. Otherwise, the human is coming almost towards the end of it, where you have all of this data gathered together. You have a basic risk assessment drawn up, a basic rationale around that drawn up, and now you're analyzing all of this to see if, from your experience, certain things were missed. And I will stop there, that there is also a need, and that is becoming an increasing need, to drive that experiential layer, the analyst experience of, hey, for this type of client, this specific analysis, additional analysis should have been done. That sort of intelligence plow back into the AI agents is also becoming more of the critical ask of the day.
Yeah, very, very clear. Marijn, anything to add?
Yeah, I definitely recognize that distinction, and also in that integrating agentic into your overall system or solution that covers the workflow and the journey that delivers ultimately I think the most value. Certainly when comparing it to kind of an ad hoc analyst assist for any type of job that you do during your workday. Those can be really fun to use and easy to use, and might be also a popular really fast. And then again, the most impact is with those kind of systemic integration that Supriyo mentioned, because there you can also control that the tasks that the agents perform, that they are as per policy and as per the standardized process that you want to follow, so that the outcome is standardized and predictable, etc. Which also means that you don't only need an interface for the end user that might be the human in the loop that is verifying the outcome. You also need interface for the experts that are actually tasked to configure the agents, which are likely the really experienced KYC practitioners rather than the data scientists. So they need to have an interface on this agentic layer to basically ensure that it does what we want it to do.
Yeah, and but that's a skill set shift as much as the kind of the implications of the workflow. Raja, your thoughts on this topic?
Well, I think almost everything has been said on this topic. So in an effort to not be repetitive about it, what I would say is we are seeing this more bottoms up, and what I mean by that is we're actually almost everybody has access to all kinds of LLMs these days, be it within your corporation or at home, and most people probably have their own access to either GPT or Claude. And what we're seeing is the analysts kind of they are creating their own agents, and it's so easy to create those agents. While we are talking about workflow, a little bit of what we are seeing is how bottoms up driven this is. Whereas when this conversation first started, it was all top down to say, hey, like we really need to do this agentic AI implementation, and we need to start building agents. And we went, what are agents? Like, why do we need to do this? And what we're seeing is our KYC analysts starting to build very small agents that are making their own lives more productive. And how you take that and then think about that as all of the different functions that Supriyo spoke about in the workflow to implement, and then the orchestration that ties it all together to show auditability and evidenceability within that, I think is key. Maybe one other call out I'd make, and we talk about workflows, and then here I'm going to kind of point to policies a little bit. There are all these large policy documents that we have policy specialists writing. How you ensure you're extracting the right rules out of that versus looking at the rules you already have configured that then translates to your workflow is a very key factor in how effective your workflow is going to be or not, because very soon you're going to start looking at rules that exist today, and you take those rules and go, I can very easily automate this through an agent, versus taking the policy documentations, looking at the interpretation of those policies and how that applies and effectively changes the way you think about that entire workflow is a very key aspect of this paradigm shift from people doing it to agents doing it, and applying the right, let's say, content management system for policies and rules.
I think that's excellent points from everybody. I think we didn't talk about opportunities to understand regulations and legislation, how that applies to my policies and controls, and how that impacts the rest of our operation. But I do think that bottom-up aspect is really interesting. And how do you create an environment where you allow the subject matter experts that you have in the business to create new ways of working using AI with a level of consistency and control that makes it effective and efficient, because you want to democratize it to some extent, and that's a key part of how you operationalize AI, I think. With that, though, comes some challenges, and one of the challenges that I don't know if anybody has a good view on, I certainly haven't been able to find it myself, is what is the true total cost of ownership of these initiatives going to be? Because we do think a lot about how we can improve the client experience, how we can improve our employee experience, how we can reduce costs and allow us to concentrate on more value-added things through deployment of AI. But when the tokens come home to roost, what is the impact of this going to be? We'll talk about that in a second, but we do have a poll question on that I'd like to put as we're approaching sort of just 5 minutes to go, and I do want to sum up. So if we can just put that poll up, when you think about, there's lots of potential, lots of opportunity for AI. We've talked about some of the opportunities and challenges in how you operationalize it within organizations, how you make choices, how you can deploy. But when it comes to thinking about the long-term cost of ownership, where do we think we sit? Are we really confident that we know what everything's going to cost us? Model changes, how we maintain them, what the token costs are really going to be. Okay, interesting split in the poll. A few responses. Okay, so with just a minute or two on this, somewhat confident tends to be the one that is getting. So we know there are gaps, but we haven't quantified all of those. Does that echo what you're feeling and thinking, Raja?
Well, on a lighter note, I would say I don't have to worry about that cost. We have other groups worrying about that cost. So I'm looking at the use cases and how we apply it. But at the same time, I do think that the pricing structure around this is evolving. The way tokens get used for inputs versus outputs and what you get out of it is evolving as well. I mean, you could literally and ask Gemini or ChatGPT the question how many tokens did this query take, and it will tell you how many tokens it's taking, and it literally takes anywhere between 10 and 20 tokens just for that one statement.
Yeah.
Right? And that's just the input, and then there's the output. So is there going to be a cost factor? Absolutely. But at the same time, when you talk about effectiveness, efficiency, reskilling, I think there are a lot of factors to this. So the pricing around this and the effectiveness around this and the efficiency value of it, all of that is going to evolve and change. And I'll kind of leave it at that, right?
Okay, good. Marijn, do you have a comment on this aspect?
Would be very similar to Raja, although I really like the idea of let it calculate its own cost. Same as that we do a lot at Gen AI. It can also check its own work. So these are the simple tasks you can ask it very well. Yeah. Maybe Supriyo, you have a different view on the TCO topic.
I think the whole cost model is emerging. Terry, to be perfectly honest, I don't think our clients have a complete understanding of all the different aspects that they need to be mindful of in terms of cost. There is this base build cost, but then the overall cost, there are a lot of hidden costs around this, which you unearth as you kind of go along this journey. But that cost aside, what we have seen is as those programs mature, the benefits obviously outweigh this tremendously. And that's a statement, even not knowing all the costs elements completely, we are very confident of saying, because we have realized those benefits in so many cases where we went with a slight leap of faith and we said that, yeah, absolutely, we know this component's cost. There were some additional components of cost added, but eventually you as a standard make anywhere between 30 to 50% cost efficiencies across the board. I mean, that's what we have seen.
Okay, good. Thank you so much, Supriyo. We are just about out of time. Quite a lot of detail on some of the topics covered, I think, and excellent points from all of our panelists. Thank you so much for taking part. As I mentioned at the start, this session has been recorded. We do have a couple of in-person roundtables on AI and specific aspects of within KYC coming up, one in London and one in New York. To register you're interested in those, you can email us at info@encompasscorporation.com. And on the screen right now, there is a QR code where you can download our latest ebook, which is about creating trust in AI and KYC. It only remains for me to thank Marijn, Supriyo, and Raja for excellent contribution to the conversation. It's a big topic. We couldn't cover everything. I'm sorry I couldn't get to the questions in the chat, but really enjoyed spending some time with you. And yeah, hopefully we'll get an opportunity to do something again in the near future. But with that, thank you all very much and take care.
Thank you.
Thank you.
It's a
Thanks,
pleasure.
everyone.
Thanks. Bye.
Bye.